Alright guys, so after a couple months off due to unforeseen issues outside of YouTube, I am happy to say that I'm bringing back my monthly update series where I update you guys every single month on three specific topics. Number one, the current state of the economy and the stock market on a more kind of macro level and let you know how I feel about everything that's going on right now. Number two, what stocks I bought and sold over the past month, which was February 2020. And then number three, what stocks I'm thinking about buying or selling this month here in March. Did I say 2020? I mean 2021. And of course, if you guys enjoy the series, and I know a lot of you do because I was getting a lot of requests to bring the series back, then please consider hitting that like button. Really helps with the YouTube algorithm and it also helps keep the channel alive and it means a lot to me. But with all that said, let's go ahead and jump into this with part number one. And that's going to be the current state of the economy and the stock market and how I feel about everything going on. And there's a few things to discuss here because I definitely have some mixed feelings on where we are currently. Now, I know stocks have been dipping a little recently and everyone is kind of freaking out, but I actually think that the market is still a bit too high. I'd really like to see it fall some more. The S&P 500 is still up close to 100% in the past 5 years after really skyrocketing from that 2020 crash and is only down about 5% from their all-time high. The same thing can basically be said about the Dow Jones, as you can see on this 5-year chart right here, and it's really only the tech-heavy NASDAQ that is actually dipping a little more as it is currently down about 12% from their all-time high. So a nice little correction there, but even then the Nasdaq is actually still the best performing index of the big three as it's up over 160% in the past 5 years even after this most recent dip. And that's because many of these tech companies actually benefit from the pepperoni lockdowns since people are kind of forced to stay home and use their internet-based products and services. So a tiny pullback now relative to that huge run up is perfectly normal in my opinion. And a lot of it is driven by fear of rising rates. By the way, that does make it harder to borrow money. So when you've got these overvalued stocks, these overvalued kind of tech stocks, they really do kind of need to come back down to reality. It's a normal thing. And as a long-term investor, I always welcome these kind of drops. And I'd really welcome a much bigger drop since the economy is still, in my opinion, in horrible shape. And I don't really think the market should be trading as high as it is right now. Now, don't get me wrong, unemployment continues to improve as continuing jobless claims continue to trend downward. But more recently, we've been kind of flattening out a little, stuck mostly in this 4 million range, which is still around 2.5 times higher than where we were before the global health crisis started. However, I don't want to be overly pessimistic because I do actually think that there are reasons to be optimistic, and really two in particular that I think will help the most. Number one is government stimulus, and then the other, which I actually think is the more important one, is the dramatic ramp up of V-shots to help us get rid of the pepperoni and start opening up the economy more and kind of finally starting to get things back to normal. When looking at stimulus though, one thing that I don't like about it is that here in the United States, we've now printed more than 35% of all US dollars ever created in just the past year. And yet all we really had to show for it in terms of stimulus checks were $1,200 about a year ago, $600 back in December, and now we're still waiting for another round of $1,400 checks that the government has been taking a very long time to pass. But just so you guys know, it's only going to make up around 22% of the new bill that will cost us another $1.9 trillion. Now, don't get me wrong, I do think we need the money, but at the same time, I get the feeling, guys, that people are really starting to believe that we can just kind of print money forever and there won't be any consequences. Just before the whole health crisis started, the Federal Reserve was warning everyone about the devastating effects of printing money, even going as far as to say that it would lead to economic ruin, and yet now it seems like printing money is all we really know how to do. Personally, what I would rather see happen is a ramp up in V-shots and a larger reopening of the economy, and thankfully it does actually look like that's what's happening. Biden recently announced that there will be enough V-shots for every American by the end of May, which in my opinion is really great news, although he did also say that he doesn't expect things to go back to normal until another full year from now, which is kind of scary, but overall, it's a good reason to be optimistic. And we're already also seeing some states actually like start to fully reopen, which should really help those unemployment levels come back down as well. So overall, I don't really think we're looking too bad in the kind of short to medium term. V shots are ramping up, states are reopening, and all the meanwhile, we do have some stimulus coming to help us kind of bridge the gap a little. Now, I am definitely worried longer term about all the money printing that we're doing, but that's something that I'll worry about later. Right now, I really just want things to stabilize as quickly as possible. So for right now, I would say that I am mostly comfortable buying stocks still. Do want to be careful not to overpay for anything because I do still feel that the market is a bit too high. I would definitely welcome some bigger drops throughout this year, give me some better buying opportunities, but I can still definitely do some strategic buying here. And then if the market does dip anymore, then I can increase my buying a little bit later on. So anyway, that brings us to topic number 2, which is going to be what stocks did I buy or sell in the past month, which was February. Now, I do just want to clarify something. As a lot of you know, I am currently moving in the process of moving into a new house and building out a YouTube studio. So my funds have been a little bit lower than normal for buying stocks. So this past month I actually didn't do much buying. I only purchased more of one stock in particular, and that is actually one of the most popular stocks in the entire market. That is, of course, Tesla. Ticker symbol is TSLA. And as you guys know, this one is already my second largest stock in my entire portfolio. So I don't normally buy it since it's already trading so incredibly high, up over 750% in just the past 3 years. But it is actually dipping right now from their $900 high all the way down to the $500 range, which is a drop of around 40% at the time of this recording. I'm recording this on Friday. There's still a few hours left in the trading day, but as of right now, that's actually a huge drop, and I do feel that this leaves a pretty good buying opportunity for me to add a little bit more. Now, I wasn't able to get it this quite low. In fact, I actually purchased it pretty high at around 675, and now it's all the way down to like 540, so I wish I would have maybe waited a little bit. But if it keeps dropping like this, especially if it was to like crash down to the 400 range, I would absolutely love to be buying some more. In fact, I actually just bought some before recording this video. Now, I won't give you guys a huge explanation on why I'm bullish, since I already talked in great detail about everything that Tesla is doing and where I see them heading in the future in my previous video, which I highly recommend to anyone interested in the stock. But I do just want to mention a couple things. First off, the sell-off is mostly happening because of the broader tech sell-off, and anytime you have an extremely high valued stock like Tesla with a forward P ratio of like well over 100, even now, even after the drop, you're gonna see it crash a bit. On top of that, Ford's Mustang Mach-E seems to be selling pretty well and stealing some of Tesla's market share in the United States, which I think now Tesla is down to like around 69% market share. But a couple things on that. First of all, we all knew that the Mustang was a very nice looking car. It has a really strong brand. We knew that it was going to be a hot seller in the EV market, and we all expected it to do well and at least steal some market share, at least in the short term. So that wasn't even like a big surprise to me. And to be honest, I can't really think of like any other electric vehicle out there that is competitively priced to a Tesla, or that is like more attractive or has better technology than what Tesla or like even the Mach-E, the Mustang Mach-E is doing. So I'm not really too worried about competition. Tesla, I think, is going to stay on top, and I think they'll continue to do well over the long term. By the way, don't be surprised when the Cybertruck starts to steal market share away from Ford's pickup trucks, and let's see if any of the media reports on that. But anyway, maybe that's a topic for another day. Second thing, as far as the business goes, I absolutely love everything that Tesla is still doing right now. They continue to grow their factory out in China, which is the world's largest EV market. They're going to soon be producing a $25,000 car there, which I think is going to be huge for them. They're building another gigafactory out in Europe, which I believe is the second largest market ahead of the United States, and they might even start production there a little later this year, which I think is extremely fast. And then there's even reports that have come out of Tesla heading out to India for their next international gigafactory. And just a couple days ago, even more reports were coming out saying that India is offering big subsidies to Tesla so that they can beat China prices. That would be huge news, because India is a fast growing market, and being able to build cars there for even cheaper prices than like China, that would be very beneficial for Tesla. Look, I get that the stock isn't very cheap. In fact, Tesla is very expensive still, but I think that when you've got the clear leader in one of the biggest high growth markets of the future, I think there's going to be a premium that you're going to have to pay for a stock like that. And it's not just Tesla's not just a leader in terms of technology, but they're also a leader in terms of brand strength in the automotive market. I kind of think of them as like a mixture of Apple and Amazon, and I know people are already going crazy. Anybody who doesn't like Tesla is going to go crazy for me even mentioning something like Apple or Amazon, because Tesla's obviously a tiny tiny little company by comparison. But the comparisons are that Apple, I would compare them in the sense of their branding, how Apple kind of dominates the smartphone market by having really good branding, and they build such premium devices that usually perform a lot better than most of the competition. And so people are always kind of willing to pay a premium for Apple smartphones or Apple products in general. And that's kind of how I see Tesla. Like, if you're going to get an electric autonomous vehicle, I really don't understand why you would go for anything other than a Tesla. And I do think that there's going to be stronger competition coming up, and we're already seeing that with something like the Mustang Mach-E. But other than the Mustang, I just don't really see a lot of other really attractive cars out there. I still think Tesla is the best. It's going to remain the best in my opinion, and I think Tesla will be on top of that market because they're so far ahead. And then the comparison that I was going to make to Amazon is just in the sense that with Amazon stock, the valuation never really made sense. I mean, I remember buying Amazon stock when it was insanely lower, but that valuation was still extremely high, and people would call me crazy for buying Amazon stock. But I just realized, like anybody with common sense, I would look at Amazon and I would say, okay, we all know that the market is heading towards online shopping. We all know that retail is heading towards an online future, and Amazon is the clear leader. Nobody's even close to them. And Amazon is going all in on it, and they're focused entirely on it. They invest entirely on it, and they're just going to be on top for a very long time, for the foreseeable future. So I was willing to pay a premium for that Amazon stock, and it paid off very well for me. Who knows what happens with Tesla? I'm not saying Tesla is for sure going to be a winner over the long term, but I personally feel that it will. So I'm okay with nibbling at the stock still. And that brings us to topic number 3, which is what stocks am I thinking about buying or selling here in March of this year? And Tesla is definitely on that list because as it continues to drop, I am more than willing to keep nibbling away at it. And especially if it goes down to that like $400 range, I would definitely want to be accelerating my buying, even though it's already such a large position in my portfolio. Okay, now besides Tesla, another kind of growth stock that I would like to be picking up some more of is Alibaba, but that's already a very large position for me. And I actually just made a video back, I think in like January. I was buying the stock in January. So I just recently purchased some more. So I don't really want to be buying anymore at this time. I might, but I don't really want to cover it too much in this video. But I just wanted to throw that out there. Alibaba is a stock that I think is priced very attractively at the moment. So that would be kind of the only other kind of growth stock. But other than that, I would want to do some strategic buying with some undervalued dividend stocks just to kind of balance everything out. Like Tesla, definitely not a value stock, very high growth, but very highly valued. So I would rather go for some kind of balance it out with some undervalued plays, some dividend plays. And there's 3 in particular that I either do not own, or if I do, I just recently purchased them and they're very small positions. So I have a lot of room to keep buying those. So I just want to run through that list really quick and then we'll wrap up the video. Okay, now first up, I'll probably be buying some more Verizon. It's a stock that is mostly flat over the past 5 years and still sits in the lower half of their 52-week range, currently down about 12% from their high. And that looks like a pretty good price to me since their PE ratios are around 40 to 50% cheaper than the rest of the sector, leaving them with a very nice dividend yield of over 4.5%. I do like AT&T a little bit more because their dividend is like, I think it's like around 7% right now, or even more than that. But that's already a giant portion of my portfolio, whereas Verizon is actually one of my smallest and newest positions. So I'd like to kind of nibble away a little bit more of Verizon at the moment. But as far as the business goes, I don't think there's really going to be anything that overly excites me about Verizon. But overall, they're pretty solid. They're usually number 1 or number 2 in market share, right along with AT&T. And because of their massive size and their higher rankings in reliability and customer customer satisfaction over the competition, Verizon is able to generate very large profits. Now, there's not a lot of growth. Sales are only expected to climb by less than 5% in each of the next couple of years. But when looking at profits, they're a cash generating machine with over $21 billion of free cash flow last year alone. So I just really think that dividend isn't going anywhere. And at a 4.5% yield, I'm more than happy to pick up a few more shares here throughout this month. Now, next up, I also think that I'll be picking up some more of Pfizer, ticker symbol PFE, which is another fairly new addition to my portfolio. And this one is a little tricky because they technically spun off their legacy drug unit over to Viatris back in November. And that's part of the reason why the stock is down, because shareholders were either paid cash or given Viatris stock. But regardless, Pfizer is currently down over 20% from their 52-week high after years of very choppy and very volatile performance, as you can see on this 5-year chart. But despite that volatility, I actually think Pfizer is going to be a pretty safe long-term play for me. First of all, the current price is even lower than the lowest price targets on Yahoo Finance, and their P/E ratio is around 50% cheaper than the rest of the sector. Yet when looking at their business, Pfizer is actually pretty solid. Not only are they expected to make over $15 billion from their pepperoni V-shot in just this year alone, which by the way was before they even made additional deals for like literally hundreds of millions of more doses like this one with the European Union. But they still have a giant pipeline of 95 new projects, with 24 of them already in phase 3 trials and 9 in registration. Financials have been all over the place though in recent years, which does explain some of that volatility, but Pfizer is still very profitable with over $11 billion of free cash flow last year, and after getting rid of their legacy business, they're now poised for higher growth, which means their very attractive dividend is likely not going anywhere. I will just mention though that because of that spin-off, the dividend yield is expected to drop a little, but still most estimates I've seen out there still have it at like over 4% going forward based on today's prices, so I'm not very worried about it. Overall, Pfizer looks like a decent long-term dividend play to me. And finally, speaking of long-term dividend plays, one of the best options out there is definitely Johnson & Johnson, ticker symbol J&J, who for whatever reason I've always put off buying this stock, but I really think I need to start dipping my toes soon because there's a lot of reasons to be optimistic about their future. First off, I personally feel that the stock has been suppressed for years, as it's only up by less than 50% over the past 5 years at a time when the rest of the market has really skyrocketed. But I think that was mostly due to bad publicity that I've covered in previous videos, and those are things that I don't think will really hurt them in the future. But as it stands, J&J is currently down about 12% from their high, which, like Pfizer, is also lower than even the lowest price targets on Yahoo Finance and about 17% lower than the average, leaving them with a P ratio that is around 20 to 40% cheaper than the rest of the sector and a very solid dividend that yields over 2.5%. It's a little low, but that dividend has been grown for close to 6 decades in a row, which is almost impossible to match. It's easily one of the most reliable dividends out there. And that's thanks to their massive size and large amounts of staple household products that people constantly purchase, leaving them raking in tons of profits. We're talking over $20 billion in free cash flow last year. And just like Pfizer, Johnson & Johnson is also making a V-shot for the pepperoni, which just recently received emergency approval from the FDA. Unlike the shots from Pfizer and Moderna though, J&J's is not based on the new mRNA technology, but is instead a more traditional style V-shot, which is leading some to believe that it may be a much more popular option going forward. I know this is anecdotal, but I actually have a lot of friends and family that are specifically waiting for the J&J shot just because they feel like maybe they trust it a little more, and they also prefer like the single dose shot versus the others that I believe require multiple shots. Although I do think that the J&J one is less effective, so that might put some people off. But and there's also been some other controversies that I won't get into in this video, but some like religious controversies with the J&J shot. But I think that if the pepperoni does turn into a yearly issue with like different variants and stuff, which I absolutely hope does not happen, but if it does, then people may prefer the single dose option that they trust a little more, and that would obviously help J&J's business. By the way, one of the reasons why Biden is optimistic about having enough shots by the end of May, it's actually because Merck agreed to help J&J, the rivals here, and they agreed to help J&J manufacture more V shots just so that they can get more doses out more quickly. Anyway, that's probably not going to really benefit J&J's financials, at least not here in the short term by very much. Any kind of profits are probably going to go towards covering all that research and development, all the distribution, everything that went into making and distributing that shot. And by the way, I think Johnson & Johnson actually recently stated that they're not aiming to make any profit from the shot. At least I think it was maybe within like the first year or something like that. But I think what they're actually trying to do is they're playing the safer kind of long-term bet on it. I think they're betting that the pepperoni will stick around and be kind of a yearly issue, which again, I really hope does not turn out to be true. I really hope this thing just goes away, but maybe the realistic thing is that it kind of lingers around and people still treat it as a very big deal. And if that's the case, then I think Johnson & Johnson wants to be one of the leaders in that kind of market. And I think that's why they're taking the kind of safer approach, using technologies that have been used before in V-shots and making it single dose so that people are more willing to use their product over maybe some of the competition. So I think it'll probably benefit them more longer term rather than just right now. But even besides all that, Johnson & Johnson is just a gigantic company with so many different things. They generate a ton of cash, and that dividend is definitely not going anywhere, at least in my opinion. So it's a stock that I would really like to have, mostly just for those dividends and just kind of hold it long term. But anyway, those are the stocks that I am currently looking at. So we've got Tesla for the growth, kind of higher valued kind of growth stock, maybe some Alibaba, but still kind of thinking about it. And then we've got some safer undervalued dividend plays. Definitely a little bit more Verizon, very small position for me as of right now. Maybe some more AT&T, even though AT&T is already such a giant position of mine, but I always kind of like it at this price where that dividend yield is like around 7% or more. So maybe some more AT&T, and then definitely some like Pfizer and some Johnson & Johnson, some good dividend plays to kind of beef up the dividends in my portfolio. So some strategic buying from what you can tell, even with like Tesla, it's a stock that is going down. And then with the other ones, they're undervalued. So you can kind of see what I'm doing here. I'm trying to be strategic in this kind of wild market because I do expect volatility to continue. But anyway, I hope you guys enjoyed the video. Thank you so much for watching. Hit the like button if you did enjoy it, and hope you're all doing well out there, and I will catch you in the next one. Leave your thoughts and comments down below. Any stocks you're thinking about buying or selling, love to read those and respond to them, and maybe I'll include them in future videos. But anyway, thanks again. I'll see you guys later. Take care. Bye-bye.